Guys, I want to welcome you once again to today's episode of our basic forex training course. We've already done some things. We've been working with the charts before now. Today I want us to go through some few things we may have been hearing before now, as they will be needful for to us as we progress. Things you've been hearing. We want to talk about uh, price action. You've been hearing price action, and I guess you must have been must have been trying to understand what price action is. Been hearing about trend. Want to talk about trend. Want to talk about pips and lots, and after we should try to do a few things and then wrap it up for this video. So we're going to let's talk talking about price action. What is actually price action? You know, this price action is simply the movement of price and how these movements are printed and or recorded on the charts. I take it again. It's simply the movement of price. Price moves up and down, and you see it either printed or recorded on the charts. You see the movement of the price. So that is, in simple terms, price action. You know, so when we hear of price action, it doesn't mean something big. So it's now how what do we do with price action? What do we do with price? What do we do with price movement? How do we interpret price movement? How do we make our judgment with the movement of the price? Okay. How do we come to a conclusion or determine where price is going? So all these things is at what we call price action. Okay, the movement of the price, and then how we use this movement of the price to determine what is going to happen in the market, where the movement is directed, or that is price action. Then talking about trend. What is a trend? A trend is just an overall direction of an instrument or trading activity in the market. Is the market going northward or bullish, or is it going up? When we say that market is bullish, it means that it's going upward. Okay. When we say market is bearish, it means that it's going downward. So it's either the market is going upward or it's going downward, or it is parallel. So when we talk about trend is simply the movement or the direction of the market movement, or a particular instrument, the direction of a particular instrument in the market. Is it upward or is it downward? Okay. Now we talk about uh, okay. Now when this trend, well, how we spot a trend? How do we not spot a trend? How do we determine what the trend is, if the market is going up or down? Okay, how do we determine if the market is going up or down? So we identify trends when you see a series of swings that form in a structure of higher highs and higher lows, or lower highs and lower lows. Okay, what do I mean? Or let me start with what a swing is. A swing is actually formed when the price gets to a certain level or point and reverses. Anytime the market price gets to a certain level or point and reverses, at that point a swing is formed. Now, let's take for instance the market is going up, just as it's doing here now. Okay, just as it's doing here. Let me take this trend line. As market is doing here, for instance. Okay, so if now you can see this trend that I'm drawing here now. So here, market has been on an upward movement. Okay, and it gets to this point. Sorry. Okay, it gets to this point, and started reversing. Okay, so at this point, it got to and couldn't make upward movement again and started reversing. That is a swing that the market has formed there. Okay, now if you still watch, you discover that the market is still uh, uh, on that reversal mode, is still going down. Okay, now when would it for us to is now assuming this is what the only thing we can see, is it enough for us to determine that this market is an upward trend or a bullish trend, a trending market? Is not enough. We need to encounter this several hours, at least 2 or 3. Okay, meaning that we need to have this market as gets to this point. Let me turn this thing this way. Okay, so that we have a wider screen. Okay, so if we have this swing and the market corrects by coming down and goes up again, passing the former level and forms another swing up there, tries to make another correction and goes up again. Now, when we count up to 2 or 3 of this, we can now determine and say that this market has begun a bullish trend. Okay, and that is what we mean by higher high, because at that point, at the point it formed this swing, we call it it's a high. So this point high, when the market after this correction is that is going on here, pushes up again to surpass this zone and forms another swing, that one becomes a higher high than this previous one we are seeing here. Okay, if the same thing repeats and goes up again and forms another swing, that other one becomes another higher high. So higher highs tell us we have an upward trend or a bullish trend. But if in the place of higher high now we now start having lower high, after this high here now, the market comes down and goes up again and could not make a high that is as high as this previous one. And after correction, it comes down again to make a low and goes up to make a high that is not as high as the previous one. It's because that we are now having the high is now descending. The peak of the market it forms, the swing it forms is now descending. So it is that one is called lower high. It's called lower high. So at that point we can say that we now have a bearish trend. The market is now bearish. It's now in a layman's term, it's a selling market. The market is now bearish. Okay, so uh, that is it. So just talk about the trend and then the swing and then higher high and the lower high. So for a higher high, sorry, let me remove this. Let me go to a higher time frame and see what to. Okay, let's see example of a bearish market here. So from here we can see an example of bearish market from what we have here. Okay, from what we have here. So this is a typical example of a bearish market. At some points here, we can see, let me take an instrument to highlight what I'm showing you. At some points here, we can see the market moving down from this zone and coming to uh, form a swing downward here. And after a kind of correction, it comes to form another one. Oh, shit. Okay, just hold on a bit. Okay, let me just allow my trend line to be there to use it to. So here we can see at this point we can see a swing here, and another swing here too. So this swing here is lower than the swing we have up here. Okay, so in other words, we call this one lower low, and the upside we call this one lower. The upside we call it lower high. So this is a typical example, and like that, the market kept on descending. It's a typical example of a bearish trend. So when we say we have a bearish trend, market is bearish, it means that the market is going down, it's going southward. It's a selling market in a layman's term. All right, it's a selling market. So that is it about swing, about the trend. That is it about the trend. And then let's talk about pips. Pips, you've been hearing about pips. What is pips? What is pip? Pip is a measurement, a unit of measurement. Pip is just a unit of measurement to express the change in value of the market. Now, you see that market makes up and down movements at different times. Okay, let me check what this market is doing. At different time, market makes up and down movements. So now, like I said before, the pip is just a unit of measurement. The unit of measurement is to express the change in the value of the market. And this pip we're talking about is just nothing but just nothing more than the fourth digit or the fourth decimal number after the decimal points. Like you can see the price of the market price on the right hand side of this chart, this zone. can see it. That's the market price. You can see the figure 1.09681. And here we have after the decimal point we have after one we have the decimal points, then we have 09681. Now the pip we are talking about is just the fourth figure after the decimal point, which is this 8. The fifth one is is um, is the pipette. Our concentration is on the fourth one. So there are charts that don't include the fifth one. Okay, you only see only 4 digits, but this chart has the fifth digit, which is called the pipette. But our concentration is on the fourth one. So the pip here is actually the fourth uh, digit. And I'm going to show you how to calculate the pip. Assuming you are placing a trade, you want to enter a trade at let's say, sorry, want to enter a trade at let's say the current market price now, or no, okay, let's take this point at 1.09173, and you want to put your take profit at, for instance, this point 1.09039. Okay, or let me take it up a bit. Just hold on. Okay, let me leave it here. We are taking our entry price at 1.09173, and we want to take our profit at 1.09077. So how do we calculate the pip here? We'll subtract 1.09077 from 1.09173. Okay, and if we calculate it very well, we'll discover we have about 14 pips. We have about 14 pips. This is how you calculate your pips, to know your pips. So even when you want to set your stop loss, this is also how you calculate your stop loss. You enter this market. You want to enter the market at 1.09173, and you want to, let's take for instance, place your stop loss at this point 1.09420. This is about you now subtract this figure 1.09173. You subtract 1.09420 from 1.09173. It will give you about minus 30, something if you do calculation. So meaning that you are putting your stop loss at 30 something pips. Okay, this is how you calculate your pips. Okay, that is pip, and how you can calculate your pip. So now, what is lot? Like when you try to execute trade some other time, sometimes you saw under market execution, you saw 0.01 and all that, and I told that this is the lot size. Okay, so now what is this lot size, and how do you interpret it? How do you make use of it? So a lot is a standard unit of measurement. Now, one standard lot usually equals 100,000 worth of currency. All right. And you're able to trade in intervals of 1,000 units, but you are not required to invest up to $1,000 to do so because Forex is leveraged. All right. So for you to trade, you must not invest $1,000 for you to be able to trade up to 1,000 units because Forex is leverage. Leverage is like is like where you borrow money. You want to perform a trading activity of 100,000, but you don't have it, but you are given the privilege to borrow that 100,000 with the little money you have, and then to trade as if you have 100,000. That is leverage. Okay. So now, when you put from what you're seeing here, you see 0.01. 0.01 here is a micro standard, is a micro lot size. In Forex, this 0.01 is a micro lot size. And for a standard account, it represents 10 cents. It represents 10 cents, meaning that when you take 0.01 to trade, it means that each pip movement that takes place when you execute your trade takes or gives you 10 cents. That is what it means in a layman's term. Okay? It takes or gives you 10 cents. Now, if it goes 10 pips in your favor, it means that you have 10 cents times 10 pips, which is $1. That is 100 cents, which is $1. Now, the next one here, now you can actually increase this by having 0.02, 0.03, 0.05, 0.09. After which the next thing you have here is 0.10. Now, 0.1 here is a mini lot. When you're taking a 0.1, it means the interpretation is that each movement takes or gives you $1 because 0.10 lot size here represents $1 per pip. So each pip movement takes or gives you $1. 10 pip movements will now give you or take from your account $10. If you're losing 10 pips, it means that you're losing $10. If you're getting 10 pips, it means that you're getting $10. Okay, so you can as well increase this to 0.99. And then from here, the next one here is 1.0 and above. Now, for 1.0 is a standard lot size. Standard lot size, which represents $10 per pip. $10 per pip. The same interpretation goes, I made in the other ones, goes for this one, for 1.0. You can have more than 1.0, but here 1.0 is a standard lot, 0.1 is a mini lot, and 0.01 is micro lot size. Okay, so that is it about lot size, trend, talked about PEEP, and I also talked about price action. Now, before we end this particular video, I want to show you how to. Now I've taught in the previous videos I've mentioned. I've shown you how you can execute a trade, how you can modify the trade. But I remember I didn't talk about how you can close a trade partially. Now let me use it to wrap up this video. So let's go back to the chart window and try to execute a trade. Let me remove these lines. Let me remove these horizontal lines. Okay, let's just execute a trade here so that I can use it to teach you how to close a trade partially. Closing a trade partially means that you enter the trade and possibly the market has gone in your favor, and you want to close maybe half of it and still allow some to run and possibly to hit your main target. Okay, so you want to close half and leave the rest to run. How do you do that? First, let's enter this trade just at market price. So let's increase, because this is the minimum lot size you can enter here. So for us to say we are having a partial, we are going to have a partial closing, means that we must have entered something bigger than this. Okay, so let's have 0.04 for instance, and let's place a sell instant order, and it's done. Now we have the market executed. Euro USD sell 0.04. Okay, you can see the market where it is. Now let's assume this market is running and is in profit, and possibly it has come to this point, and we expect this market to come to this point. Now, having come to this point, we want to take half of the profit and then possibly lock the remaining, and before and now allow the market to eventually come to this point to give us the remaining profits. So how do we do that? We call that partial closing. Partial closing. So what do? We come to um, trading window, and we click and hold on this trade we executed, this Euro USD order, and we click on close order. Now when you click on close order, it brings you this same window as like that looks like where you entered the trade before, and up here you will also see the lot size of this trade. Okay, and down here you see close with loss of. If it is in profit, it will tell you close with profit of so amount. Okay, so now before we click on close with, we'll come here to adjust. This is a 0.04 trade, lot size trade. That is this is 40 cent trade. Now we want to close half of it. So what we do, we adjust the lot size here now. Let's close half of it. We now make it 0.02. Okay, and now close with loss size. We will now say close with loss of, because it's already is in minus. If it were in profit, let's assume it was giving us, let's say $4, and we are closing half of it. It will not tell us here close with profit of $2. You are seeing $4 and you are closing half. It will tell it close with profit of $2. Here now we are seeing close with loss of 56 cents, because we have reduced the loss size from 4 to 2. It means that at 4, with the loss size of 4, is the loss recording already is more than this 40 something cents. It's about 8 something cents. So when we close, we discover that that market will still be, but we have closed half of it. So let's just close. Okay, now you can see that the loss size here has reduced and we still have that market running. Now if I come to history here, you see that we close with 38 cents. Okay, loss size 2, but what we entered initially was 0.04, and we've closed half of it 0.02, and the half of it is still what running. You can still see the market here. Okay, now finally, before we close this, I just remember something, what is called a break even. When we say do a break even means that you place a trade and the trade is in your favor. The trade is in your favor, and possibly you are targeting 30 pips or 100 pips or 50 pips, as the case may be. Okay, let's assume you are targeting 30 pips and the market has gone 25 pips in your favor. So when we say do a break even means that you now move your stop loss to below your entry point. If you are selling, just move your stop loss to below your entry point, whereby even if the market reverses, you can no longer take loss in that market. The worst thing that will happen is that it will push you out without any reasonable profit. If you are buying, we say move your stop loss to a little above your entry point. That is break even. So this is where I say goodbye on this very clip. In the next clip, we'll be talking about how to analyze the market. Okay, and that clip will come shortly. Thank you.